everyone, and welcome to this edition of Interactive Brokers IBKR podcast. I'm Jose Torres, your senior economist, and today we're going to be talking about forecast contract picks. If you've listened to our earnings call for the third quarter, you know that forecast contracts have made up been a significant growth driver here at the firm. We currently have 8,232 open instruments listed, up 27% from 6,480 at the end of June. Volumes have increased significantly, up 165% from last quarter, as more investors realize the opportunity these contracts represent. And today I'm joined by a group of special investors that happen to be personal friends of mine as well from the Wall Street South networking group. We have the founders of the Wall Street South Group, Adam Lorraine and Douglas DeRosa there. Both of them are, you can see them in one camera, they are together. And we also have Vince Rendazzo here. Vince, Adam, Doug, hello.
Hey, Jose, thanks for having me.
Hey, Jose, thank you for having us.
Absolutely. Some quick bios. Vince is the founder and chief market strategist at View Right Advisors. Adam is co-founder of Wall Street South, of course, but he's also the CEO at Dynamic Capital Holdings. And Douglas is the co-founder at Evolve Digital Group. And today we're essentially this is the first effort where we're going to be talking about Forecast X picks. A lot of our audience, you've been seeing it in articles, you've been seeing it on social media where some of our employees, mostly me, come out and talk about our opinions on which forecast contracts look attractive. Of course, we have a wide variety of selections spanning from elections to financial market indices to government actions like the government shutdown, for example, economic indicators, climate, and more. So today it's October 22nd, and we're actually seeing some volatility in markets. So the forecast I'm still bullish on the S&P 500. So the forecast contracts that I like are for December 31st. I like the yes contracts across those specific thresholds. I want to go to Vince now so you can share something that he may like.
Yeah, thanks, Jose. I think this is a really cool idea you guys have. So I publish equity market research, analyzing cycles and specifically market breadth to help portfolio managers better understand exposure, risk reward. So this is really up my alley. And that's why I'm going to stick for my part of the discussion to the equity side. So I'm going to focus on the S&P 500 and the NASDAQ 100 contracts. I looked at the S&P 500, currently here we're around 6,700, down a little bit today. I'm looking at the December contracts like you on the yes side. The 7,000 to me, I think represents pretty decent value there with a 35% probability according to right around now what you guys have on your screen. And then you've got the 7,200, which is interesting too, but the probability drops really sharply on those to 13%. And I think this sort of aligns with how we view the cycle right now. The advance, which we think began in October of 2022, was only partially refreshed with the correction earlier this year. And that would mean we're kind of in the later innings of the cycle here. So it's hard to expect a really explosive move up to that, 7,200 level here with so little time left in the year. But the 7,000, I think, makes sense. It's a nice round number for people, for technicians. And we know that the algos sort of like those round numbers too. And the market has been incredibly resilient. So I think that's really what we're looking at. And, of course, from the near term, I would say that, there is some signs here because we have seen some disconnects in the breadth since about mid-September. We do have sort of a near-term caution out there, but it doesn't look like it's going to be derailment of the cycle, just sort of a pullback and then I think rally to the end of the year. NASDAQ 100, the next contract here up, again, currently around 23,000. I looked at December, yes. And the 26,400 contract, and that's priced at 31%, I think right now. That to me, I think is decent value and sort of in that same theme in the sense that, we've seen a lot of resilience. We've seen, of course, a lot of tech leadership and still looks like, again, something that I think decent to have reasonable upside into the end of this year. So I think those are interesting. And again, I think we get some choppiness in the near term, but that'll probably heal up those divergences and then take us off, through the end of the year.
Terrific, Vince. Thanks. How about Doug? What do you think?
Well, I'm the person here that is not a markets prognosticator or forecaster. So I was looking at it actually through the lens of the political futures, with the lens of obviously our networking group here, that we've had probably 60% of our members have moved to South Florida post COVID. Some of these reasons are salt tax, things of that nature that are certainly financial generated. But I was fascinated with the futures, the gubernatorial race in New Jersey, the race in Virginia, and obviously the mayoral race. They're almost 90-10 in favor of the Democratic nominee. And that was fascinating. Obviously, those are Democratic strongholds, but it was interesting just because of that. The view is so polarizing. And I really do think that this is a precursor to perhaps the midterm elections next year. We'll really have to see how this plays out. Obviously, there's some concerns in New York City of how that race may go for some. And then we would certainly be the beneficiaries of that in South Florida with new people moving down. But if one takes the lens that the current presidency is doing all the right moves and that it should be a Republican landslide going forward, given all the positive sentiment news, really is interesting, because everything in this election, based on the results that I'm seeing from your audience, is quite the opposite. It really is very pro-Democrat. It's not a 50-50 balance. It really is almost a proverbial landslide. So interesting to see how those plays out in those elections. And then obviously through the lens of South Florida, how that plays out down here. So.
Yeah, Doug. And, if for those folks that think that one side is undervalued, that the Republicans really do have a better chance, let's say it's a 10 or 20 or 30%, that does turn into a dollar. Shall the underdogs be correct? So for the audience, if you think that the GOP's odds in a particular election are particularly low, you can go in there, buy some yeses of maybe 15 cents, 20 cents, 25 cents. And if they do pull out an upset, then you do get a dollar back and you collect interest on the way. That shifts in proportion to the value of the contract, as well as shifts in the Fed funds rate. Adam, Lorraine, what do you got?
All right. So I looked through all the contracts. The three that I found interesting, which is kind of in alignment with what I've been talking about, was the unemployment rate. I think that will be higher than what's posted. Not going to spend a lot of time going into it. It's obviously, AI driven, and partially what you're seeing now with the markets, today, right? You see Texas Instruments, which is everything other than AI, complete slowdown in everything, military, manufacturing, autos. So you're seeing it. Netflix as well, margins compressed by 20%. They missed EPS by $1. Maybe it's specific to them, I'm not sure. Also the Bitcoin trade. My work has Bitcoin going to 90,000 at a minimum. And we were just talking about it earlier. I think, there's some real use case questions on Bitcoin. That doesn't mean that Ethereum and Solana and Tether and some of the others that have these functional use cases won't be still around and be good. But I think Bitcoin is vulnerable, just technically, quantitatively. If you look at a monthly perspective, and I've posted it, a move to 90,000 would not break the overall macro trend structure of it, but it would be pretty devastating from a short-term perspective. And then the last one, which we just were talking about, is the nuclear one. The AI is all built on this idea that these trillions are going to be spent, and nobody really spends a lot of time talking about the energy and the power consumption that's going to be needed. In fact, if you look at all of the AI build out talk that they've been talking about, these trillions of dollars, it would take 73 nuclear plants in order to power those data centers. And the fact of the matter is that there's not a single nuclear power plant being built right now. And even if you started one today, it would take about 10 years for it to complete. So if you want to throw some cold water on some of this stuff, nobody wants to talk about the other side of it, but the reality is, there's some real issues there. And when it comes to powering, this AI dream, I'm not saying it's a pipe dream, and I think it's real. I think there's substantive value there, but we are at a pivot point in the cycle where I think we could see a little bit of dislocation in some of these markets. The S&P 500, since it's such a behemoth, it is such a store of value. I mean, other than the 10 stocks that really run it, all the rest of the stocks are basically zombie stocks. I mean, those stocks aren't going to go down a whole lot. They're probably not going to go up a whole lot. So to really move the needle, you would have to get a disruption in the AI supply chain and that circular framework that we talked about. But so those are the three that I saw on the sheet that I thought were really good. The unemployment rate ticking up to over 5%, probably early in 2026. Bitcoin being, below the price. I don't know what it was. Maybe the bogey was 100,000. And then nuclear being lower than expectation. So those are the three that I picked out of all of them.
Yeah, the Bitcoin year-end $95,000 threshold, the no there is 21%, 21 cents. So, for those folks that are bearish on Bitcoin and perhaps agree with Adam in his analysis, you might want to go into the year-end $95,000 no at 21%. If for whatever reason Bitcoin does drop to 95,000, that 21% will go up to roughly 50%. If you have conviction and you want to stay in the trade, you can stay till expiry and it'll pay out $1, or you can get out at the money equivalent in forecast contract from a forecast contract standpoint, and you'll get out at around 50% or so. That'll be 2.5 times. And then also, if you're bullish on Bitcoin, if you think that by year end it can exceed 145,000, the yes there is 15 cents at the moment. I want to do, before we go, we're going to keep these short, folks. We're going to be doing these every few weeks or so. But before we finish up, I just want to go around with a little bit of a surprise forecast contract. And you sort of tell me yes or no. And I'll do this for a few of them. It'll only take us a few minutes. But Vince, I'm going to go to you first. New York City Mayor Zohran Mamdani, 91% yes. Are you on the yes side there? Or are you on the no side?
I'm on the no side, I think. I mean, I'll take that. I think that's I think there's value there.
Yeah. They say that if Sliwa drops out, Cuomo's odds would jump up significantly. So, for those folks that there could be value there on the other side at around 9 cents, that 9 cents could become 20 cents or 30 cents before the election in around 15 days. How about what do you think? Let me go to you, Adam, on the Bitcoin contract. I know you say it's going to 90,000. Do you think there's value at 85,000, 11 cents per year end?
Above 85,000?
Below 85,000 by year end would be 11 cents.
Yeah, that's tough. I mean, I wouldn't take that bet only because, 90 is the number that I'm targeting. So I probably wouldn't take that unless you saw some sort of a crack in the, my thesis there, whether it's meaningful or not, is that the surge in quantum computing. It's not a question of if quantum breaks point. It's a question of when, right? And so that'll always be an over going forward. Investors have to sleep at night wondering if this is the morning that they wake up and Google says that cracked the code with their quantum chip. But, and then it caps open, at $1,000. But look, not to get bogged down in it, I wouldn't take that one.
Okay. Doug, gasoline prices have been down sharply. Part of it has been significant oil production from the Trump administration, deregulation, and more incentives to drill, baby, drill. As of the week ending October 19th, gasoline prices were $3.02 to average across the country. Do you think by year end, would you take above $3 at 66 cents or below at 34 cents?
Adam is saying below. I will say it depends on where you sit with the recession, right? We've been kicking this recession idea. Unemployment or employment gains have been slow, right? So where do we sit with that, with this lens? Not to be political, I don't see a lot of drill, baby drill going on currently. I think the market has pretty much held firm for the last year. So I would probably say it trades a little bit lower from here, but I wouldn't say aggressively lower. I think the macro environment will determine that. I will go back just to Vince's question though. I'd like to answer that. I think that again, this is not taking a certain side, but the biggest crisis our country faces, affordable housing. It's in South Florida, it's in New York City. And I really think that's what voters will be voting on, right? Is affordability. And that is something that is certainly a large proponent of people's income in New York City and South Florida. And I think that's something that as an agenda politically, we do need to obviously tackle as a country because it's squeezing a lot of people margin wise each month. So I think that's probably the main reason why people will vote for Mamdani. There you go. I took a stab there.
And you know what? We'll save this for the next time, but next time I'll
Okay.
ask you about housing starts and building permits, construction levels, if those are going to rise. I'm going to stay with you, Doug, for our last question, because you've been liking the election themes. So for the midterms, the Democrats are at 56% for the House, in terms of having a majority, and the Republicans are at 73% for the Senate. So just to reiterate, folks, there's a 56% chance that the Democrats are going to return as the majority party in the House, 56%. In the Senate, 73% chance that the Republicans are going to maintain control. What do you like there, Doug? And the first in the House and then in the Senate.
Sure. Personally, I'm a big proponent of national security. I think as a country, if you're not secure and safe, you can't obviously coexist or exist, right, globally or domestically. So I think that really is, and that's obviously a strong Republican footprint and thesis that Republicans live by. But with that said, I don't know if that's resonating with voters, again, given what I said earlier about those three elections currently. So I do think there's a great chance that the Republicans probably do lose a lot of ground in the midterms. I think the economic challenges that people are facing, I still don't see costs going down significantly. My Jersey Mike sub is still offensive, highly expensive. Jersey Mikes, don't take that personally. I love your product, but I just think that things are not as inexpensive as they were 6 months ago. And people will vote with their wallets. And I think a year from now, people will say, you know what, I like where we're going from a security wise, a national security perspective. I don't know if it's really bettering me though, from my personal spending or checkbook. And I think people then will probably vote more based on their personal economics. And I just don't think those are really going in the favor of a lot of people.
So, an interesting thing there, Doug, and a trade that I'd like to point out is if you buy the yes for the Democrats in the House at 56 cents and the yes for the Democrats in the Senate for 27 cents, as long as they win one or the other, you'll still make $1 back, right? 56 plus 27. But if they take control of both chambers, then you would get $2 back. So, for those folks that think that the Democrats are going to have a strong showing in the midterms, that could be a potential trade that they'd like to take. How about you? Let's go to Vin. What do you think about the midterm elections? I know you're more of a stock market and financial market technician, but these prediction markets, they're broad and sometimes opportunities arise in areas that we're not necessarily experts in, but we may want to dabble in.
Yeah, I think this one's tied to inflation, honestly. I think, like Doug said earlier, people kind of vote on that. And if we do see inflation stay sticky and start to see signs of a slowdown, like Adam was pointing to on the jobs front, then that could be a recipe for a surprise loss there of the Senate there. So I think that trade makes sense to me. Not picking sides because I'm totally apolitical, but I think that could make some sense. Yeah.
I want to go last question to Adam. Without the political conversation got a little boring, so now I'm going to tilt over to Fed rate cuts, if I may. I know Adam likes to talk about that here and there. We've had many conversations about the Fed. What are you thinking for October's pretty much in the bag at 96%. December, though, is only 83% for a 25 basis point reduction. What are your thought processes there in terms of rate cuts into year end? And the next question I'll ask after you answer the first one is, what do you think about rate cuts next year?
Sure. So, I would say that if I'm correct on my unemployment call, and we'll have to see how that plays out, then the Fed is going to have to try to counter that with rate cuts, right? On the one hand. And then on the other hand, if inflation stays sticky and the costs continue to hang around, then they're going to be conflicted. But I think at the end of the day, you're starting to see a little bit of slowdown creeping in, things as strong as I think a lot of people think they are. And I don't think things are going to fall apart. I just think that, there's just this kind of digestion period that we're going to have to go through as, this AI adoption and integration starts to get rolled out. And then also just from an economic cycle standpoint, we're kind of due for a little bit of a contraction, even though the Fed doesn't really allow that to happen because they're always trying to micromanage it. But so to answer your question, I think that they probably should have cut 50, the last meeting. So I think the next one's in the bag, as you said, a December one, even though it's questionable, I would say that's probably in all likelihood. And then I'm not sure when is Powell's, he's done in March, right? Is it March?
I think May.
May. Okay. So he's got a couple more. I mean, he wants to obviously protect his legacy. He doesn't want to go out on a bad note. So he'll probably, I would say, fall in line with the market and what the market wants. I mean, the market wants rate cuts. Trump wants rate cuts. I mean, everybody wants rate cuts. I mean, he's probably behind the curve. So I would say, there's probably 2 to 3 more consecutive rate cuts in the bag. Now, whether that's a good thing or bad and how that'll play out, with the bond market and kind of the inner workings of that and whether that'll actually bring rates down is another question. But I would say that for the foreseeable future, I would say that we're probably in for 3 or 4 rate cuts, especially if the jobs picture continues to be weak.
Yeah, so it sounds like you love the December 2026 4.2% yes on unemployment. That's only 26 cents. So you just need a modest uptick in unemployment. That 26 cents becomes $1 at expiry. Any opinions, Adam, on who's going to be the next Fed chair? We have Hassett at 34%, Waller at 19%, and Warsh at 11%.
Probably Waller, but Warsh is probably a little bit too hawkish for Trump. So I think they've had some good discussions with Waller. I mean, looks like Besson is going to be the guy that makes the recommendation, and then Trump will follow his lead. And to that point, I think that's one of the reasons that, Trump has toned down the tariff rhetoric. I think Besson's got his ear and said, look, sir, you can't be hammering China with tariff talk because the market doesn't like it. And that's why he's been pretty vague about how he's going to respond to, the rare earth hoarding and whether he's going to have the meeting with Xi in a couple of weeks. And I guess that's probably a good thing. But at some point, he's going to have to, address that, and we'll see whether they have the meeting or not and how he addresses for tariffs. And so the market has that built into it. At some point, we're going to have to see what the reaction function is there.
Terrific. So I wanted to ask Vin about interest rates, but I promised to keep it short. So I'm going to ask that question next time. Vince Randazzo, Doug DeRosa, Adam Lorraine, Wall Street South. Promise to keep it short because we're all going to be at the Hilton in West Palm Beach later this evening for a cocktail dinner. I look forward to seeing you all. Thank you very much, Vince.
Thanks, Jose.
Thank you, Doug.
Thank
you, Adam. And I look forward to seeing you soon. And we'll do this again next time. Hope you all had fun. Take care, everyone.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell, or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives, or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances, and, as necessary, seek professional advice. Interactive Brokers LLC is a CFTC-registered futures commission merchant and a clearing member and affiliate of ForecastX LLC. ForecastX is a CFTC-registered designated contract market and derivatives clearing organization. Interactive Brokers LLC provides access to ForecastX forecast contracts for eligible customers. Interactive Brokers LLC does not make recommendations with respect to any products available on its platform, including those offered by ForecastX. Forecast contracts are only available to eligible clients of Interactive Brokers LLC, Interactive Brokers Canada Inc., Interactive Brokers Hong Kong Limited, Interactive Brokers Ireland Limited, and Interactive Brokers Singapore Pty Ltd. Forecast contracts on U.S. election results are only available to eligible U.S. residents. Futures, event contracts, and forecast contracts are not suitable for all investors. Before trading these products, please read the CFTC risk disclosure. For a copy, visit our warnings and disclosures page.